Good day all. Ira Epstein of Linn and Associates with your metals market wrap-up for this Monday, the 23rd of September, 2019, and I think it's fall now. Wow. Pretty soon the time change is going to happen, but it's not yet. Big up day in the metal markets. I was even surprised copper was up, to be honest. What kicked the markets off is we saw European PMIs come out, both service and manufacturing sector, and we saw German PMI. I mean, we're talking they're entering recession type levels, contraction going on. The U.S. numbers improved slightly on them, so that was a pleasant surprise. But the fear, I think, is what's setting it off, and that got the silver market, for whatever reason, kicking dramatically, nearly $1 an ounce. I mean, that's an unusual move. Gold was up $16. You can see the euro down. We're going to know tomorrow about Brexit in terms of the UK Supreme Court deciding if what Mr. Johnson did in his prorogation was legal or not, according to them. So we're finding all these things out. You know what's going on at the UN at this point with all the meetings are kicking off. We're seeing the president and the heads of other states everywhere. You're looking at energy prices still holding up. Bonds and notes were up as well today. So let's take a look at what gold is doing. And today's close at 1524 is just $2.60 away from, at least on a weekly continuation chart, of the highest close we've recently had. When we take a look at the action, here's what I was nervous about last week. Getting down and taking out these lows. Had you done that, which you haven't done yet, I think then you're looking at a market that could surprise to the downside. The rally today is not yet in all clear. You really need to get over this area and start the move back into this range of resistance for me to get the all clear. Yes, it's nice to have an $8.90 rally in the D's gold today at the end of the day, but remember, Monday set up Tuesday reversal, so be a bit cautious. What about a trend? Well, you don't have one at work. What you have is a lower low that was made last week and now a higher high pattern. So we have a market that's still spinning around in this whole area. Let's call it the 1490 to the 1562 area, just back and forth in there. And where did the market get to? Well, if we look at last week, on Friday you got up to the 18-day average of closes. You had been breaking down, and I'm certain I would have been nervous had the market got under that price. It held when I did my original gold report, the lower Bollinger Band. We'll come to that right now. You hit the lower Bollinger Band one time, got back to that 18-day average shortly afterwards, and now you're back to it again. So it's a market, in my opinion, that is trying to figure out, can it get legs to it or not? In terms of momentum, you were oversold and pointing down last week. You can see the market's entering a pattern of momentum up. Bias is up because you're over the 18-day average, but you're not yet in that stepping ladder pattern of higher lows, higher highs. Still, the bulls look like they took control at the end of the day. In GLD, you have a pattern here where you can see this low took out the low here. So it's one of these ugly chart patterns, and I use that term rarely, but often when the swing line gets an outside day. You had an outside day down, and if you take out that day's high within 2 sessions, which you did on Friday's close, you catch a group of traders. That's the theory that I have. Will you make it to the upper Bollinger Band is now the question in play. In GDX, you can see you've got higher lows, higher highs. So for a change, and we haven't been this way since the beginning of September, for the first time, I'm saying in a long time, the market's back in an uptrend. Higher lows, higher highs, a settlement over the 18-day average of closes, and momentum pointing higher. If the market can mount an attack to the upside, could it get to the upper Bollinger Band wherever it comes in? If it slips back, I'd look for support to try to come in at the 18-day average of closes. Now, the gold-silver ratio came from this depth down here under 80, had a nice rally into the mid-80s, and now a huge move in favor of silver today. And you see this. The silver market is certainly stronger than the gold in terms of looks. Higher low, higher high, bullish. Market over the 18-week average, bullish. Momentum just turned up, bullish. If it can get going, can it make it to the upper Bollinger Band will be the question. I saw people today, I think it was CNBC, coming up with their trades of the day. You know, they have futures that get in focus and so on. And I know they were bearish on the silver, at least that's what I saw. They were talking about writing calls against this market and factoring in able to pay for puts. I don't know. The chart doesn't look that way. In the copper market, lower highs, lower lows, momentum pointing down. Now, at the end of the day, the market finished right at 261.15. So you're rallied with that break. And that break came about because you're looking at these terrible PMIs. And the question is, how does it impact copper? We're seeing China slow down. I read articles over the weekend where the word in China, of course, is fear that they'll do trade with the U.S. in small steps, but nothing to happen as they get ready for their October 1st celebration of 70 years of the Communist Party. And during that time frame, don't expect the U.S. and China to get much done, but the market wasn't able to hold on to the weakness. Now, if it were to take out 263.40, you'd negate the bearishness. So going home, I think the bears have control. I think that their risk is not to get over this high, and if they can push it, the question is, what can they push it with and how hard? In the platinum market, all we did in looking back is we corrected from the upper Bollinger Band peak, dropped into the 18-day average of closes, momentum was pointing down, and on Friday the settlement was 942.40. This is Thursday. Market was higher than that Friday, 942.60, and you had already taken out on Friday this high of 946.80. So you had negated the downtrend. You were supporting yourself 3 days in a row at that upper at the 18-day average, and you're still doing that. You haven't walked away from it. In the palladium market, it had led this parade to the upside, so you're probably seeing a switch around in things. As the market stalled in price, you still have the embedded reading. Until this is lost, the bulls have control of the market. Could it make it to the upper Bollinger Band is one of the questions. Lose the embedded reading, I wouldn't be surprised if you make a run for the 18-day average of closes. In the dollar index, well, the dollar won today off of everybody's poor PMIs versus how we look. And that's an important factor. Now, we're just churning back and forth, as you can see it in the Bollinger Bands. Remember, 95% of the time you'll trade within them, and you're not getting traction upside or downside. This is a market churning away at this point. You know, one of the things that I like to do is look at seasonals, be it in agriculture markets, be it in financial markets. An example, I don't know if the stock market indices are going to go higher here or not, but I know of what the seasonals were looking for, and the market was bullish on them the first 15 days of this month. And I know we hear on TV, oh, the market's weak in September. That can still happen. But the first 15 days, if you looked at their studies, you didn't see that. So what I do is I look to see, what does a bull year look like? And with their interactive charts at More Research, you can say, am I in a bull year or a bear year? And all you got to do is look to see where you're at till September, and you have an idea. And you can get rid of the other years. You can look what a 5-year, a 15, or a 30-year average does. But remember the limitation of seasonals. And their work, I think, is phenomenal. But the limitation is it's past history. And that does not guarantee future performance. It's a tool. It's one like a moving average, others. What I like about their work is they're going to give you reports on what to expect this month, what the seasonals are. They'll give you an idea as to these are the strongest trades that you get at this time of the month, blah, blah. How do you get a 2-week access to it? It's simple. It's just either call my staffer. You can go on the internet. If you go on the internet, you'll see our free offers on our web page, front page. Click it. You'll see this is one of those offers. Or click here. Once we get all your information, we'll get everything to you that you need so you can keep up with this. And when I do my live webinars, which are going to come again in October of this next month, I often bring these up and talk about them. So another something for you. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.